Good evening, everyone. This is Nathan P. Lacroix, another installment of Insurance Talk. Today, we're going to be talking about association health plans. Let's get started. So, what I want to talk about first is the Affordable Care Act. A lot of mixed opinions. This was the idea of the Affordable Care Act. So, the essentials of the ACA, aka Obamacare, started really getting implemented back in 2013 going forward. It made lifetime maximums unlimited. Plans beforehand, you may have had a plan that was really cheap, $100 a month, $10 copay, but the lifetime maximum was $500,000. Some people, they had cancer, unfortunately, or there was some kind of worst case scenario situation where they exceeded that within a month. We have seen claims many times over that exceeded the $500,000, the $1 million limit. So when you reach the $500,000 lifetime maximum with a $1 million annual maximum, anything above and beyond that, you would be 100% responsible for. So regardless of your situation, lifetime maximums now have become unlimited. The other thing was guaranteed coverage for the sick folks without rating them up. See, pre-ACA or pre-Affordable Care Act. Now, if you applied for individual health insurance, here's what would happen. Let's say you were sick. Let's say you had diabetes. Let's say you had COPD. Let's say you had HIV. Many carriers would not only rate you up exponentially, but some carriers may flat out deny you. The Affordable Care Act prevented that from happening. Regardless of your health situation, you would get coverage. The other thing that the ACA allowed and benefited many people, it guarantees that all plans have a minimum level of coverage, otherwise known as essential health benefits. Primarily, there's 10. Things like preventive care, prescription drugs, things that some plans just didn't offer. Just normal things nowadays that we would expect to see in health coverage that we would pay for. Beforehand, before Affordable Care Act, you just wouldn't see those. Things like prescription drugs, you wouldn't see that. Granted, the premiums, the cost for you per month would be drastically lower, but when it came time to actually seek those services that you really truly needed, you would be without, and you would have to pay out of pocket. The other thing is that for those that couldn't afford the healthcare coverage, let's say you're on the federal poverty level line, let's say you're just above that, the ACA paid a portion, or in some cases, all of it. So those are some of the benefits. I'm not here to go about the cons. This is to go over the ideals, what the goal of the Affordable Care Act was. We'll get into the cons and the mixed opinions about that in just a moment. So I wanted to talk about an analogy here about what healthcare reform and the ACA was truly wanting to do. Now, this is broad spectrum, macro version. Your own opinions, you could talk about those in the comments below, but this is essentially what it is. This is an unbiased analogy here. So the analogy here is, let's say you rent an apartment and it's 2015. Okay, you've got a nice apartment, it's in the LA area, and you're paying $1,000 per month, and it's a one-bedroom apartment. Okay, so go 2014. Alright, let's say your lease is up, it's time for a renewal, and your new lease agreement, $2,200 per month. This is what health insurers experience during the ACA transition. Pre-ACA plans, you were talking again, somebody who's 40, 50 years old, maybe hit with a $200 to $300 per month premium for their healthcare coverage. 2014 hit, ACA fully implemented. People during their renewals are trying to get coverage for themselves on an individual level or a group level. They were seeing anywhere between an 80% up to 150%, sometimes a little bit more. Now, a lot of people, they did have some sticker shock. They were appalled by that drastic increase. But ultimately, again, going back to the goal of what ACA really truly wanted to do. So, going back to the analogy of renting an apartment. So, by you paying that $2,200 per month, what this gave other people the opportunity to do is this. So, people that had an eviction, they were guaranteed an apartment. Now, you may not have ever experienced an eviction. Some people have experienced an eviction through no fault of their own. Let's say they thought they were paying their roommate the rent, and they were expecting that roommate to pay their landlord, but they just didn't do it. They got an eviction on their record. Normally, what would happen is you would just not get that apartment. Well, in this case, in this analogy, you would get a guaranteed apartment in that apartment complex. Now the apartments also come with minimum amenities, things that nowadays you would expect to have: dishwasher, microwave, a fridge, washer dryer unit, whereas beforehand may not have ever existed before. There's guaranteed no major increases. Yes, this one was certainly a major increase, but after that, no major increases, no 150% increases after that. The important thing is, with your $2,200 per month as opposed to $1,000 per month, you're helping those that couldn't afford an apartment in the first place. You know, those, again, on the federal poverty level would never be able to afford an apartment like this. Now, with your contributions, you would be helping those out. So those that couldn't afford the apartment, now part, or in some cases all, of their rent is paid for because of what you contribute towards that. So again, that's the ultimate goal of ACA. So for some of those people that are now paying a little bit extra, you're actually helping out all of the other Californians that necessarily they just couldn't afford the coverage or were previously denied access to health care. Let's go into the association health plans and for what it is, and why I talked about the information before. The association health plans was a response to the Affordable Care Act, and it was to answer the inquiries, if you will, or actually the complaints of those people that were just above the federal poverty level line, or those that were living paycheck to paycheck but couldn't qualify for subsidies. They were on that they were on this cusp where the healthcare was too expensive to actually pay for every month, but they made just enough money to where they couldn't qualify for all of those subsidies before. So what the association health plans really truly is you get a group of people together now. Rather than one person having to pay an exorbitant amount of money now in the Affordable Care Act arena, let's say you have a small group as well, a bit of a larger group, they all band together and create an association. This association essentially is a business. It's a business group that has come together to get health insurance. And the benefit of that is, with these small groups banding together, the individuals banding together, they become a large group. Now, large group insurance is a whole different ball game. They're treated like a large employer by the health insurance carriers, and they get more buying power because there's so many people putting their money every month into the pool. They essentially can get better coverage for cheaper prices. So you're talking the old days where you would have something called composite rating, where an employee, regardless of your age, would cost one set amount. Let's say $350 per month just for yourself, whether you're 25, whether you're 55, whether you're 75 years old, as opposed to the Affordable Care Act, where a 25-year-old could be charged, $500, a 26-year-old would be charged $510, 27-year-old, and so on and so forth. So whatever age you are, you'd be rated accordingly. The association health plans allowed you to consolidate that premium and get one flat rate just for yourself or your dependents as well. This association health plan, from what I've read, they also provide multi-state carrier options. So let's say you're part of an association and it was domiciled in Chicago, Illinois. You can still join that association and get a nice provider organization plan, or a PPO plan, to where you would have access to the entire nation's provider network. So if you're here located in California and you wanted to go to UCLA or some other doctor in California, you can do that part of the association health plan because of multi-state carrier options. And all of that together provided the overall costs to be reduced. And again, this is nothing new with the large employer group segment. This is something that they see and work in every single day. We're just giving the chance to the individuals in the small group people who had to deal with the 150% increases back in 2013, a chance to take advantage of those cost reductions and composite rating. So what am I referring to here? This is actually a link to, I'll provide a link in the description, to the AHP law, or the Association Health Plan law. What I'm highlighting here, it's how the association is being treated according to the ERISA Guidelines. So according to ERISA Section 3, Paragraph 5, for determining what this truly is, it's a MIWA. It's a multi-employer welfare association program. It's happened in the past. It still continues on to this day. But essentially how the association health plan is it adopted the definition of what a multi-employer welfare association is, and now they're using that to create the association, or the AHP, in the future for, again, other small groups and individuals to combine their resources, create a group, and have that buying power to reduce costs. Why is this important? It's because of the state of California and the insurance commissioner, Dave Jones, and what he went on to say. So this is California's response. So the California law prohibits the formation of any new MIWA, or a multi-employer welfare association policy. So that's actually a long-standing law that prohibits it. Dave Jones, on the website, on his announcement, went on to describe why the law actually is currently in force. Primarily it's due to insolvency, the associations not being able to pay their bills, and then you're dealing with employees or members of the association being terminated, even though that they paid their premiums. The association didn't pay their big bill to the carrier, and suddenly they're footing the bill. Due to that insolvency, they no longer allow that to happen. In the state of California, that is. Okay, let's talk about cons. Just for a second here, there are cons from the Affordable Care Act, there's even cons from pre-ACA, cons from the association health plans. So that's why options may vary on this one. Now, I can't really talk about the cons without immediately going into opinions, so it's a wide spectrum here. With the Affordable Care Act, I mean, let's take a look at a human standpoint. If you were somebody who was in the middle of cancer treatment, and for whatever reason your coverage was canceled through your group, let's say your employer fired you because he found out you had cancer and you really couldn't continue on past the COBRA That's another topic that we can always discuss, but let's say that ended and you needed individual coverage and you were trying to get that coverage and you had to submit that you were in the middle of cancer treatment. Imagine being told, okay, we're not going to take you. You're going to have to pay upwards of $750,000 in some cases for that cancer treatment. Or they would tell you, and a carrier would say, you know what, we'll take you, but 2 conditions. You, one, have to wait 6 months before you can get any treatment rendered under this pre-existing condition clause here. So if you want cancer treatment, you're going to have to wait 6 months, which you can't do. And we're going to charge you 3 to 4 times as much as a healthy person. So with the Affordable Care Act that came in, you were given a guarantee that regardless of your situation, you were going to get health care, and you weren't going to be charged 3 to 4 times as much. You would be charged like everyone else. The other thing was, you know, there were people who couldn't afford health care, and of course people have talked about health care costs nowadays, but back in the day they just simply couldn't afford it. Now, for those people that, you know, were on that cusp where they couldn't apply for Medi-Cal, you know, where you're at the federal poverty level or below, if you were just slightly above, now you had the opportunity to get health care for you and your family and your kids, where essentially the government would pay a portion or even in some cases all of it. That would be a benefit. The cons that people saw, though, were those people that were just above the federal poverty level threshold. You know, let's say you've got a family of 3, you're making, you know, $85,000 a year, which is pretty good, but there's many circumstances where you have a lot of bills, you have a lot of debt, you're right at that cusp where you're making just enough money to pay all of your debt, and you're essentially living paycheck to paycheck, to where you cannot afford, you know, an extra $1,500 a month. You cannot afford an extra $2,500 a month, depending on the plan or your group coverage. Yet the Affordable Care Act mandates you to get that health coverage, and if you don't, you're going to get penalized. So there are people on all ends of the spectrum to where they are barely being able to afford it, to where it's just a financial burden. You've got people that are on the federal poverty level where they do get that free health coverage, where it's the greatest thing. So there's a lot of conflicting information to where they base their pros and their cons off of. The same with the association health plans. The insurance commissioner Dave Jones does make a valid point in his statement regarding insolvency, to where it sounds like a good plan in the beginning, but there is risk involved, to where the association, what could happen is the association itself doesn't pay the medical bill to the carrier, and suddenly your coverage is canceled, even though you've been paying every single month. It even harkens back to the analogy of the landlord situation, where you thought you were paying your roommate, and that payment was going towards the rent and towards the landlord, and then you find out no payment was being sent over, and now you're out with coverage, and you have to foot the bill for your cancer treatment, diabetes, COPD treatment, whatever it may be. So that risk as well, a lot of people are still talking about that too, and how that's a big con. To that I say, you know what, there's risk all around. Even, let's say, the response to the small business segment here in the state of California, where, again, back with ACA, you had prices that skyrocketed in 2013 going forward, where they're looking for a solution. Well, even pre-ACA, even post-ACA right now, if you're working for a mom and pop shop or a company of 20 people, you still run the risk that the amount of money that's coming out of your paycheck every 2 weeks, you're hoping that your employer is paying the health insurance carrier, and if they don't, you're going to be without coverage. And let's say you had kids, you went to the urgent care, racked up a $15,000 emergency room bill, you'd be on the hook for that. So that, again, there's risk involved there. So a lot of people can bring up stats and facts, but it's really based off of their perspective that can really tell you about what those cons are. So this is getting more into what can we do to reduce cost. This is getting into an op-ed piece. This is my own opinion here. So how do we reduce cost? Is it consumerism? The word, I mean, you've got a lot of stigma regarding consumerism. You're a sheeple. You're tailored to, you're being tailored psychologically to the man. You're giving in to corporate greed. You're giving in to, I shop, therefore I am. It's that really bad stigma to where I don't like to use the word consumerism. There is a different alternative. It's called price transparency. So if we empower you, the consumer, the person taking and buying their health coverage, if we empower you with price transparency, I feel that may really do some good work when it comes to reducing overall costs. So there are a couple of articles that I'm going to provide some links to. One of them, Jacqueline Lapointe. Let me take a look here. What did she say? So, author Jacqueline Lapointe for Practical Management News. She goes on to state here, and I've highlighted that healthcare consumers now, they are expecting their experience with the providers to mirror those in the retail space. So what that means is, actually, let me see if we can take a look here. So this is a prime example of price transparency. Hospitals are starting to show how much they charge. Los Robles Hospital, UCLA, they now have a part and a section on their website to where you can go and take a look at the price estimates for what they charge. Like if you have to go in for an appendectomy, UCLA is pretty robust where you can pick a part of your body and go over the actual procedure, and it shows you the cost that the doctors will charge for that service at UCLA. So going back to price transparency, it's very similar to when you go into a store, when you go into 7-Eleven, when you take a look at the different, let's say, sodas or different snack options. When you're going to shop for a car, you're able to go online. You're able to go on, Kelley Blue Book. You're able to take a look at the Carfax reports. There's so much information out there when you buy something that you can compare it with all of the other product labels, with all of the other manufacturers, to where you can say, you know what, this product in this particular store or by this particular manufacturer, this seems like the most reasonable price. And so when you go out there on, your Yelp reviews, or when you share with friends and you say, take a look at the pricing that is shown on the website, even restaurants nowadays, where you can go and take a look at the menu online and see and determine what's a fair price. More importantly, Yelp reviews, where you can review the level of service as well. You, the consumer, the empowered consumer, you now get to take a look and determine what's the best course of action for you. What's the right price in that market, and what's the best level of service for that price. And because of that, we've seen drastic reductions in prices in the retail market. We're starting to see that now in the cosmetic industry, because the cosmetic industry, with plastic surgeons out there, they're showing their prices online, and they're gladly accepting reviews by the people who, render those services. And because of that, there's been a huge decrease over the past 10 years of what it costs to get those surgeries done. And now we're slowly starting to see that in the medical field, where before you would go into, Los Robles and you get an appendectomy, and, 10 years ago it may have cost $2,500. You'd never know that. You just get your $250 emergency room copayment. But if you had that same appendectomy over at UCLA, it may have cost you $25,000. You would never know that. Yet those charges are going to the insurance carriers, and the insurance carriers are having to pay that cost, and all you see is that $250 copayment, and you're wondering why price for your services are so high, or the price for your monthly cost for your health insurance is now escalated. from one year to the next, you're wondering what's going on. Well, with price transparency, you really get to see what's, what those costs are, and you get to determine what's right for you. So you can reach out to your other fellow empowered consumers, and you can see, oh, this hospital has great service and a low cost. I think I'll use that. And so with that, you create competition, and now you have these hospitals that are drastically reducing their cost to compete with the market, making sure they give you the best service and best price. And in fact, actually, I skipped over a slide here. Mario Schlosser, so he's the co-founder of the newest insurance carrier for small group, Oscar Health, here in California. In a recent interview, he did state that we, as the empowered consumer, we need to fundamentally rethink the way networks should be built and the way benefits should be structured. So you may think that, the healthcare industry is some kind of conglomerate, some ethereal idea, and we simply can't change it, or it can't be changed by you, but it can. I myself, I have worked with VPs, CEOs, and I would consider myself still a low man on the totem pole. I'm still learning so much, but I can still talk candidly with the decision makers of the health insurance market, let them know what I'm finding out. I can let them know, hey, this is what really should change and what we need help with. And they work with their assembly people, they work with their underwriters, their actuarials to determine the price, reduce the price, add benefits, take away benefits, see what's working and what's not. And you can do the same as well. I just saw somebody who had a complaint where, unfortunately they had a bad experience with their health insurance carrier and their doctor, to where there was a certain service that it just wasn't authorized, and through miscommunication, I mean, you got somebody who wants care, who needs care, and they're sitting there going, I can't get the care that I deserve, and I'm paying $750 per month. What am I really truly paying for? So we need people like you who's watching this video to get involved and really help everyone out to educate the consumer and advocate for those who need the service, who need better benefits at a lower cost, and we can do that with price transparency. So what can you do? What can I do? Reach out to the carrier. Every carrier has a media relations page. At the bottom you can go to contact us and have media relations. You can contact myself, any other insurance professional to keep you informed. There's a link here for nahu.org. Look for an agent, look for somebody who is a part of the association. You can contact your local assembly representative, let them know that you want price transparency for your healthcare costs to be reduced. And I've got a link there too. I'll provide that in the description. Empower yourself with knowledge, empower yourself with consumerism, empower yourself with like-minded people, and we can make a difference. We can reduce those costs, and we can create universal coverage, affordable coverage for all with better benefits. So that, again, that's all I got. If you have any comments, if you wish to like, comment, and subscribe, please do so. I'd love to hear your thoughts on this. Let me know. Again, this is Nathan P. Lacroix signing off. I'll see you on the next one.